Hello and welcome to this video. My name is MF INCOOM. Today we are going on the adventures into Impermanent Loss and a retrospective look at the 2019 to 2022 like crypto market and strategem, kind of looking at buying Bitcoin, Ethereum and dollars and like in proportions, see how the assets would perform and what they'll be worth now. Also, if holding versus staking is worth the time. Remember that this is not financial advice, and if you need financial advice, go seek a financial advisor. 2019 bear market DCA comparison. So I decided to make a little experiment, and the idea was that if I just blindly bought during 2019, once a month, $1,000 was each purchase. I did that every month for 1 year, and then from 2020, January 2020, all the way till now, I'm basically just looking at how that would have performed based on like what I would have bought. So I kind of set up my purchases here in the first year. There'd be 12 in total, and then we're just looking at the rest of the timeline, next 2 or 3 years. So I go next. So this is the strategy. Basically, this is the ETH and Bitcoin chart. I'll show you easy on here. So this is where I'm putting in $1,000 a month. It's just 2019. Seemed like a decent year. Probably looking back, I probably could have DCA'd earlier, but that's all right. And then with Ethereum, it's during this section here. It's 2019 is where I'm purchasing, and then this is the area where I'm like looking at the analysis of how it performs. And these are all the different kind of portfolios I'm looking at. So we got hold Bitcoin singly, just on its own. Hold Bitcoin and dollars. So each month you put 50-50 into Bitcoin and dollars, and then that would be your portfolio. And then the last one would be to LP Bitcoin and US dollars. So we've got something similar, but with ETH now. ETH on its own, ETH with dollars, and then LP together. We've got one more way. Hold Try Crypto. That is a Curve LP token, which is between dollars, Ethereum and Bitcoin at a equal ratio, and then to LP the same tokens as well. We also have hold Bitcoin and Ethereum after spending £500 each month for them for a year, and then to LP that same thing as well. And then we've got hold sub and LP sub. So this is an index on Beats. I can move to so you can see it here on Optimism, on Beethoven. You can see Yellow Submarine, our yield machine, that has staked Ether in at 50%, and then dollars at 25, then Bitcoin at 25. So it's an index just more heavily weighted to Ethereum, which I think is pretty cool. This Try Crypto here is I can't remember if I found it on Ethereum or Arbitrum, probably Ethereum, but there it is. They're the two indexes that I like. So one like equal weighting and one more heavy Bitcoin weighting. So let's have a look now at, let's be brave. Yeah, okay, let's go over. Can I do, look at this. Let's try this, and that might work better. Okay, cool. So here's the data that I put input. I went to this Coin Codex website and was able to look at historical data, but that was the website I used. And as you can see, the dates all the way from like 2015, but I just used these dates here from the 2019, that's when I purchased. So that was the basis of the prices. We've got the purchases and the prices I would have purchased at. And then this is just kind of where I did all my workings out. But what I wanted to show you is the comparison if held. So how many portfolios? I think it's 7. 1, 2, 3, 4, 5. There's 7 portfolios here. So this is what we have. Cool. So if I just bought Ethereum for that first year, look at that. It would have been the highest one. This should be able to compare. That'd be 300,000. Gone from like putting 12 in to 300,000 peak. And then the weakest one here is to hold Bitcoin and dollars together. I haven't put any staking in at the moment, no LPs or nothing. It's just holding and single assets. It's just a little bit more complex to put in the staking at the moment. One thing I noticed that the Try Crypto does sit quite nicely in the middle. At the peak of 300,000, that's 141,000. It's not too bad. But yeah, one interesting thing to note as well is with this strategy, if you look over here, what has performed the best at the start, or let's say what performed the best at the end of my buying period. So that'd be at the start of like 2020, when it was Ethereum that was valued the most. Anything else, even it was Bitcoin that was valued the most, and even holding Bitcoin and dollars was highly the second most valuable. So there goes a switch. There is a switch between Bitcoin outperforming to Ethereum outperforming. Yeah, we know this, but it was interesting to see the data here, and maybe come to think about the strategy after, like, to have Bitcoin up until this point, and then with the cash maybe that I'd been holding, I could have bought like Ethereum with it at that point, and then I would have held 50-50 at one point basically. This one's kind of nice, the Bitcoin and Ethereum. I think the relative safety of holding those two assets in the whole of crypto, you feel like it's going to have some lindiness. It's going to be around for a while. If you're going to bet on two coins, it'd be those two. So to have them, to have them together that you're holding as part of your portfolio just seems kind of to make sense. They work with each other. So that's pretty good. I mean, as you can see, if this is a monthly, they're all peaking within 1 or 2 months of each other, and they've basically just been reducing in value ever since their peak. And they've all still maintained their lead. But I guess actually they're probably getting closer together now. This is a bigger space than this because of the logarithmic style, I guess. Yeah, so what's my next slide? So cool. This is what I just learned from this. ETH massively outperforms. It is the slowest to start, and we saw that it was worth 9,000 or something at the end. Okay, Ethereum was worth 10,600. Nope, if I just held ETH, that was 9,200. If I just held ETH, I remember to put in 12 grand over the year. So I'm down 25% at the start of the year, but by the peak of the bull run, it's gone crazy. Anything paired with dollars greatly reduces up and downside risk, which is kind of a good and bad thing. And I think I'll get on back to that in a moment. The Try Crypto sits nicely in the middle, and I think it, having that exposure to all kind of three scenarios at once is kind of nice. You've also got the optionality with the dollars to then, if you need to like reinvest them if you were holding it. And I think that talking about like is the risk is the risk reward a good or bad thing is kind of depends on how much you're willing to be exposed to the market and how much risk you're willing to take, which is a very personal thing. And obviously, can I go back? Where did we go? When we look at here, like Ethereum's definitely going to be the most risky. It's went down the most at the start, and it also went up the most at the end. Can people or can you handle the volatility? Is that something that's part of something what you want? And then what is the purpose of this position in your portfolio? So yeah, I guess I kind of expand on that later, but maybe to hold Ethereum just to sell later has a place, but then also to hold try crypto and DCA into it over a lifetime might also make a lot of sense as well for someone. Cool. So we're gonna compare the LPs now. So I just did the holding values because it was just easier to work out, and then you get all the data, more data, and more data. Here we go. So I got all 12 different scenarios. Let's just go through them. Bitcoin and hold. Bitcoin and hold dollars together. And then Bitcoin and dollars, but you've LP'd it. Then we got ETH on its own, ETH with dollars that you've held, and then ETH with dollars that you've LP'd. Then we're going to hold Bitcoin and ETH together. We're going to LP Bitcoin and ETH. We're going to hold try crypto, and we're going to LP try crypto. We're going to hold sub, and we're going to LP sub. And then we're looking at it from the like this January 2020 onwards and the value. So this is the chart. This is the master chart. So what I've done, and if you notice, like if I just go single asset, it's like the darkest color. If I'm just holding it with dollars, it's the middle color, and if it's LP'd, it's the lightest color. So like for Bitcoin, you had pretty good upside here at, it's showing me in this corner. This was worth 13,000, 14,000 here, whereas the dollars, holding it with dollars, where's that at? No, sorry, this is messed up now. That's not working. Okay, let's see if this was 117,000 for holding Bitcoin, whereas holding it with dollars, it'd be 64. And then compared to Bitcoin and LPing it with Bitcoin and dollars and LPing it would be 37. You can see it with Ethereum. You got the top line here, then the middle line over here, and then the bottom line over here, all the way down here. So it greatly reduces your exposure and your risk and the volatility by LPing it. If you didn't want to like participate in DeFi and take yield, holding that same proportion of assets is better than LPing it. There was one instance where I was quite surprised, and that was where the LPing Bitcoin and Ethereum wasn't too bad. If you look at, if the dark purple was holding Bitcoin and ETH, I wish I could show you without it popping up, but this line here, the dark purple, and then the lighter purple is just underneath this line here by the green, and that would be LPing Bitcoin and Ethereum. So to me, it seems as though there's not much difference between holding and LPing Bitcoin and Ethereum, and that's because they're both volatile pairs and they both ran a lot in the last bull market. So that could be something to think about, maybe mixing other volatile pairs with each other, ones that oscillate hopefully, and that would that'll probably get you the greatest reward in the end. Okay, and then an example here. So this here is just buying ETH on its own, the blue line, whereas holding ETH in dollars is the red line, and then holding or LPing ETH and USDC is all the way down here. So it really not very interesting actually. Imagine LPing, you buying spend a year buying Ethereum to LP it after a year, and then watch it go to, what price did it go to? Oh, come on. It went to 60 grand whilst holding just ETH would have went to 300. That would have sucked. Let's see if I go back to my slide, I can't get anything else. So LPing with USD is bad. LPing two volatile assets is good. I probably should put an asterisk here, like from that example that I showed, it seemed pretty good. However, it might not always be good. Impermanent loss exponentially increasing the more one asset outperforms the other. Yeah, so that's why like Ethereum is just so disgusting, because it did so well, Ethereum on its own. So to like stake it, LP it, like it doesn't make sense if you want growth. Whereas I guess Bitcoin, it didn't run as much, so the difference between like holding just Bitcoin and LPing it with dollars probably isn't as much as, say, the Ethereum one. Holding dollars is important to give you options for the next stages of a cycle. Yeah, so that's what I thought interesting, because all these ones where we held the assets, we didn't LP them. Like at the end of the bear market, when you knew things were going up, you would have held in this experiment, you would have held like $6,000 in dollars, and that could have given you the option to buy more Bitcoin or Ethereum. You could have even swapped your Bitcoin into Ethereum as well, by accumulating during the bear, like steadily, and then like moving into something more risky afterwards. Because one thing, like Ethereum dropped back down here when this was like a new low, not a new low, but a double bottom for Ethereum at this point here. So I could have waited all year and still picked it up in 2020 for a similar price. So these more like volatile assets really take time to lose all their value for everyone to sell, and that's where you pick the bottom up. Yield is not included. Convert to ETH for more risk. Convert to dollars for stability and optionality. Yeah, so if you're staking these assets, you would be earning rewards, and I mean, you could like compound. You can convert it to ETH, or you could go to dollars. For example, I'm in GMX at the moment. I've gone for just like stacking ETH, to be honest. It's, for me, when you look at this, I want exposure to this line, and for my yield to be paid out in Ethereum, a token that is deflationary at the moment. So that's cool. I'll take that. And spicy savings, yeah, okay. So I kind of talked about 3 different levels to it. So you got like a spicy savings account, you got exposed with options for discounts, and you got in it for the tech. So the spicy savings account would be like staking Bitcoin and dollars in an LP here. That's a spicy savings account, and yeah, I think so. Over the long term, usually you'd have a savings account for a couple years, 5-10 years. Yeah, that'd be sweet. As in, like, I'm gonna save dollars, and then you put it into dollars and Bitcoin and stake it, and it'd probably be all right in 10 years. Probably all right in. It probably takes like 2 years to be all right, 3 years to get good. Just know when you're in a bubble, and know when you need to start DCAing into it. So that would be my spicy savings account, one of these LPs. Exposed with options for discounts. So that would be like holding, like DCAing but still holding dollars, a sizable amount of dollars. And then maybe when the time is right, moving in. There's that option, like that's like the middle path. Even like someone like Try Crypto, here, holding Try Crypto would have been pretty good, as it, even with the exposure to dollars, it performs pretty good here in the middle in red. However, imagine if at one of these lower points you move that third of the dollars into something else, like into Bitcoin or Ethereum. That would have been even better performing. Staking it is still okay. It's this line here, this pink one, so it's not too bad. Yeah. So that would be my like LP comparisons. Then in it for the tech. In it for the tech is this Ethereum one up here. So this is the ones that massively outperform. You got to be a bit more of a degen to to maybe put all your money into that. Maybe it makes sense. Depends what kind of level your conviction is for Ethereum. It might have seemed like an obvious play to some people back then, and to others it might have seemed risky. So that would have been how I kind of define them. You either like going down some middle path, you kind of got a savings account, or you're going like risk on. Maybe another good risk on would be Bitcoin and Ethereum as well, because I mean you got it maxed out about 200,000 compared to 3, but I think there's a pretty nice amount to have and to be exposed to both major crypto assets like that. I think it's a good thing. I think that's it. I think that's it. Let's see if I got any other slides. MF hindsight. Okay, so look at the prices after 1 year of DCA. Which strategies worked out the best? I have already kind of spoken about this. Let me just quickly. Basically, I wanted to see that after the 1 year DCA, look at the things that have done the worst and done the best. Ethereum did the worst after the year of DCA, and Bitcoin did the best after a year of DCA. Try crypto, somewhere in the middle. So, I mean, I'm thinking like now we're not sure about if it's the bottom or not. You don't buy Ethereum because last cycle told us that Ethereum is going to be like one of the last to bottom. The first thing you should be buying is Bitcoin and dollars. But also, if you're going to dip your toes in, like this red line suggests, you could probably have something like try crypto as well, that you could be like holding, making equal contributions to those 3 assets: Ethereum, Bitcoin, and dollars. So that's one thing. Yeah. Can we go back? LPs hold better value during bear markets. So like, I hate the value of the LPs here. Look at this Bitcoin LP here. The Ethereum LP sucks compared to just holding Ethereum. But look at this over here. My worst line over here is the second best line over here. That's mad. So rather than maybe even just holding Bitcoin, something slightly safer would have just to hold or LP, Bitcoin and dollars. If I have a look here, what's the difference between? So actually, just holding it would have been slightly better than LPing it at this point. Actually, LPing here isn't too bad. You're still getting a decent amount. And even on this downturn, look, the LP is definitely the second best. Before it getting taken over here. So, yeah, bear market LPs are good. Bull markets, no way. So it's something else to think about. And yeah, these are the main assets to hold during times of uncertainty. Bitcoin and dollars. That's it. So end of bottom phase, start of growth phase, move to ETH. So if you look at on this chart, you want it to be, really if you were clever, it would have been somewhere around here probably, before you moved everything into Ethereum, or as much of it as you were comfortable with into Ethereum. And then you would sell at the peak top and you would run away with your money and everything would be good. So unfortunately, life doesn't work like that, but you can see the progression and the journey. So what I looked at, let's see if we can make it to trading view, because I wanted to look at. I wonder if I still have it. It's like the bottoms was like this Ethereum and the dollar was like December 18, so that was before I started to DCA, and then there was one in March of 2020, and that was after I stopped DCAing. So my DCA strategy with ETH wasn't really super hot, to be fair. Like, that ain't buying all of this and then coming all the way back down. So I spent most of the year buying it probably around this level here in the middle. So that's not cool. Let me have a look. There was a reason I wanted to show you this. We've got like the bottoms as well. Was a Bitcoin, Ethereum. Yeah, and these were the two bottoms here. So like December 2019, basically, maybe it's on the weekly. December 2019 would have been the time to swap everything into Ethereum to get the most out of your money. So there's that. And then, so I noticed these cycles that are going on, and I'm not really a massive cycle guy. I'm just looking. I'm just seeing, like, we spent 18 to 19 going down, then 19 to 20 kind of going sideways, roughly, and then 20 to 21 going up, 21 to 22 at the peak, and then 22 to 23 is going to be down. And we've got like our 4 years. So we've just had the year of going down, 2022. Maybe 2023 is going to be just sideways at the bottom. Well, it might do something like this, mightn't it? Or it could do anything, but that would be the year in which you'd find the bottom. So that's something to think about. So I think with that being said, if this is true, maybe the 1 year decline would lead into a 1 year bottom at 2023, 1 year of growing in 2024, 1 year of mania in 2025, and then another decline in 2026. That would be maybe a rough plan if it's following anything like that. Finally, to end, I appreciate the data more when I compile and analyze it myself. I appreciate the numbers and formula and the time horizon of the crypto markets. And I think that's important. I've probably got way more insightful information given to me by people, and you kind of gloss over it. You don't know how to understand it. Well, maybe they tell you how to understand it, but you don't think about it deeper. And I've just done these basic kind of maths formulas, and I've thought about what that means a bit more deeper, because I did it myself. And I would probably recommend people that are like uncertain about things just to like maybe have a go themselves at trying to quantifying what it is they're trying to find out. And it's easier to build conviction with own research rather than being told someone else's research and just like trusting them. So, I mean, I was always told that staking was not as profitable, but I can definitely see that. Like, I've run the numbers, but then conversely, I can also see the times where it does work out, and there are times where LPing might actually work out better. You just have to know the right time, the appropriate time to get in and out of that position. Maybe that's not something you want to do. An understanding of the cycles, simpler way to look at strategies. Simpler way, because I picked a date, didn't I? I'm not like thinking of risk levels or other prices you can try and predict. It's just a case of on this day, on this time, during this year, I do this amount and deal with it. Yeah, and that's kind of it's kind of peaceful doing it like that, rather than having to worry and constantly thinking and checking the market and stuff. So in some ways that's nicer. The amount of time you had to put into the strategies we've shown, it wouldn't be much. Only be like setting up a limit order or just going on your computer once a month and just buying on the first of the month, and then in the future I would like to expand to more volatile paired assets, because it seems as though that wasn't so bad during a downturn, and actually at the peak as well, having Bitcoin and Ethereum was pretty good, even staked. So yeah, we'll see, and also learn to code, because it's kind of fun. I wish I could, but I can't. I play around with like Google Sheets and think I'm a genius. And yeah, that's maybe next lifetime, we'll see. Next one, I added this. That's probably time for me to go through that little space dimension hole and go back to the metaverse. Stay safe, and thank you for watching this video, everyone. Goodbye.